Regulators all over the world are faced with unique challenges. Money as we know it is rapidly evolving. Our world is becoming cashless. Can central bank digital currencies or CBDCs help solve paper money issues amidst rising inflation? According to the Atlantic Council, more than 100 countries are exploring the idea of their own digital currency. China is going full speed ahead with the testing of eCNY, while banning all other crypto transactions. And are stablecoins, the other popular digital asset, stable enough to get a nod from regulators? Smart contracts are still in their infancy, and as seen with Terra UST, algorithmic stablecoins can be a risky endeavor. Since the contagion, governments see stablecoins as a risk to financial stability. Regulators here in Asia, from Singapore to Philippines and Thailand, are trying to establish guidelines governing digital assets.
There is greater impetus now among global regulators to enhance regulations in this space. MAS will also do so.
Singapore considers stricter rules for retail crypto investors to protect them, while the Philippine Central Bank, in an effort to balance risks that come with growing crypto adoption, put a 3-year hold on new licenses to virtual asset service providers. The overarching questions are, can regulators create a balance between innovation and regulations? And how can the industry and policymakers build a secure and stable financial ecosystem that includes stablecoins and CBDCs? This is Crypto Rising, where smart conversations happen.
Welcome to all of you joining us live, Forecast Crypto Rising all around the world. And this is a conversation you can't miss. Regulators cannot afford to wait on the sidelines for clarity on digital assets. Innovations shaping the future of finance, like cryptocurrencies, stablecoins, and central bank-backed digital currencies, or CBDCs, are rapidly gaining momentum, especially right here in Asia. According to a new report from Chainalysis, Asia is leading in crypto use, and the Philippines saw the most significant gains in crypto adoption, coming in second on the list. And the question is, can Asia lead the way for digital transformation of money? What impact will the regulators and policymakers have to this international conversation? Welcome to Crypto Rising, Forecast's flagship event series, where today we explore CBDCs and stablecoins from the Asia perspective. I'm Angie Lau, editor-in-chief at Forecast, and welcome to almost 700 of you joining from 90 plus countries around the globe. This is a truly international conversation, and this is where you come in, audience, where you can ask your questions, and we will be answering them live throughout this virtual event. Now, you're going to see a Submit a Question tab on the right-hand side of your screens. Enter your name, your email address, question, and hit Submit. Now, for today's panel, it is an honor and a privilege to introduce to you our guests today. From the Central Bank of Philippines, we welcome Melchor Plabasan, Director of the Technology Risk and Innovation Supervision Department. In his role at the Bangko Sentral ng Pilipinas, BSP, the Central Bank of the Philippines, Director Plabasan has taken the challenging responsibility of reshaping the regulatory mindset of emerging technologies. Next, we have Martin Picrot, who wears two hats. In fact, as the CEO of MarketNode, this is a joint venture of the SGX and Temasek, and the head of fixed income at SGX. Now, he works closely with the Monetary Authority of Singapore, or MAS, on several digital assets projects, including the recently launched FundNode that's helping build a single digital platform for all market participants. And joining us from the Crypto Council for Innovation, or CCI, is Linda Zheng, who is its new Chief Regulatory Officer and General Counsel for CCI. She has worked for top regulatory bodies in the US, including the Fed, the SEC, the Department of Treasury, and the Standards Organization for USDC Center Consortium. Most of her work has been seen in the financial stability regulations and digital asset space. She helped in drafting the popular Too Big to Fail reform and the Dodd-Frank Act. It is a pleasure to have all of them and to get deeper insights into what's happening. But before we start, I want to give a big thank you to CCI, Crypto Council for Innovation, a global alliance of crypto industry organizations for unlocking this event series for free to this global audience. So let's get straight to it. All right, let's talk about the rise of digital assets here. It is great to have all of you, Martin, Director Plebis, and Linda. Some recent developments in Asia. All right, let's color and frame up this conversation in context. First, we've got Hong Kong beginning testing of its CBDC or eHKD later this year. We all know that China's eCNY is expanding. The digital yuan is now in multiple cities, has transaction volumes topping 83 billion yuan. The PBOC is crafting that for a general rollout as we talk. Over in the Philippines, we are seeing the industry also being transformed. Binance just started to get into the market, finding a backdoor, if you will, by acquiring a licensed company to operate there. Question is, how does BSP view that? How do authorities view that? And certainly Singapore coming out with new rules to establish itself as a responsible digital assets hub. For our panelists, the question let's start off with, what's the opportunity as it stands when it comes to providing jurisdictional and policy guidance to engage with digital payment rail? I want to talk about stablecoins here. And Director Plebiscite, I want to start with you. Let's admit it, close to 70% of adults in the Philippines are unbanked. That is a critical issue. But how does the Philippine Central Bank regard the innovations in stablecoin space amongst your financial institutions to address that?
Yeah, thanks, Angie. Anyway, the BSP has always adopted a flexible approach. In fact, we have recently completed a testing of the use of stablecoin, which we have seen as it really has the potential to revolutionize, to make both domestic and cross-border payment more affordable, faster, and even the possibility of using stable coins to make cross-border remittance efficient, right? So we're open to that, as long as, again, to instill trust in the system, we need to ensure that there are well-crafted regulation, nuanced regulation, it's actually that, so that the public can be enticed to adapt to this innovation.
There's no doubt. Can you give us a sense of the kind of regulatory considerations that you're applying here? According to your own digital transformation targets, 50% of retail payments are expected to go digital. 70% of Filipinos you hope will be onboarded to formal banking by 2023. What's the progress so far? And what's the role of stable coins here?
Yeah. We are in fact on track in meeting that objective. As of end of 2021, the number of Filipinos, I mean, we already have 56% of Filipinos, so we're nearing 70%. And from 1% in 2013, digital payment now for retail digital payment now retail payment in digital form now is about 30%. So we're on track, and there are a lot of initiatives. I mean, again, probably a stable coin or blockchain is just a technology. It can help, again, help us achieve that twin objectives of 50 and 70%. So again, we recently we just issued our regulation we formalized our regulatory sandbox approach. So we are seeing expression of interest, particularly with respect to the use of stable coins.
Linda, Martin, jump in here. The role of stable coins, even for a country like Philippines, these are emerging markets here. Asia, much of Asia is still in the emerging market space, in the developing space. And so, what is the critical role of stable coins in your view as the region evolves and aims to have more people participate in the financial system that potentially is backed by digital infrastructure? Linda, I'd love to hear your thoughts, especially from your perspective, having done a lot of the regulatory work in the US and now on the enterprise side with CCI and really representing a lot of mainstream industry participants in the crypto space. What is the opportunity here as we think about stablecoins and engagement?
So Angie, first of all, thank you for inviting me to speak. I am privileged to actually be here to learn from my fellow panelists in Asia, because my perspective is very US centric. And I think we have a lot here in the US to learn from what our fellow Asian counterparts and the vibrant economies and companies that are currently developing in the region. So what I'm about to say is probably more appropriate for the US, but I hope would also be applicable to countries around the world. Right now, we are seeing the evolution and transformation of our economies into digital economies. And what do I mean by digital economies? I mean, firstly, the form of money is no longer going to be what we are used to as in traditional hard currencies like cash, paper bills, or commercial bank money, which is already a form of digital money. But what I'm want to describe here is the next leap in the evolution of money, which is programmable money, money as a form of communication. And this is something that policymakers should consider as they design and construct their digital payment rails. Is how can they design it in a way that consumers and their citizens can be able to plug into that digital money payment system and be able to participate in that digital economy. And so sometimes it's not enough just to be able to build a fast rail if you still have to go through banks in order to access the fast rails. And so here is an opportunity where we can use the new technologies, including blockchain, and also technologies in digital identity that could allow consumers and other participants be able to plug into the system without having to go through another intermediary.
The promise of that is so interesting, and I find that intriguing. Martin, how do you think about it? I mean, we're all around it. Stablecoin technology is there. We'll touch on all the aspects of digital dollar or digital fiat, to be sure. But with stable coins, this has really been a drive from the private enterprise side. By default, a lot of the private-driven stable coins has taken the role of transforming the currency of note amongst different jurisdictions and different sovereign nations to be able to participate in a digital way. I note the quote from Henry Kissinger, whoever controls the money controls the world, which is a riff off of James A. Garfield, the 20th president of the United States, who said something very similar, obviously inspiring the Henry Kissinger quote, which was, whoever controls the money supply controls the nation. And so in that way, is there this dimension of private and public roles to play in stable coins? And how do you view it, and tell us what's happening in Singapore?
Thanks, Angie, for having me. What we're really excited about in the development that we see for crypto and for stable coins is that the use cases are growing, and the fact that stable coins have established themselves, and especially the traditional ones have been very successful, have attracted a lot of assets under management, and are very capable and demonstrating that it's possible to function to serve that use case. And now, because of that, other use cases are coming in. And we started with stable coins just being a means to enable traders to get out of crypto positions into another token without having to convert it into fiat. And now we're starting to think about how can we make international transfers? And that is very actively worked on. And the next step that we see is this technology coming to traditional financial assets. And why is it a big deal? It's a big deal because the market cap for crypto assets is $1 trillion. The market cap for equity markets is above $100 trillion. For fixed income markets, it's above $100 trillion. Loan markets is $70 trillion. The size of these asset classes is so tremendous compared to what we already have in the crypto market, that this is going to be quite an interesting way to see that technology come this way. And the reason why it was so important for the private sector to go ahead and make this successful is that it was the only way, or a very efficient way, of putting everybody else on notice, including traditional financial institutions and regulators, and just users of the ecosystem, to say, does this work? Because at the beginning, there's a lot of skepticism. There's a lot of people are saying, will this work? Will this not work? Is it scalable enough? Is it secure enough? And having the application from the private sector go ahead with this and demonstrate it is what was needed, so that now other institutional players and regulators can be more comfortable with it.
Director Plebatson, are you comfortable with stablecoins?
Yeah, we're comfortable with stablecoins.
In what
Yeah,
way,
in fact,
and how are you supporting
Angie.
it?
Yeah, in fact, Angie, as mentioned earlier, we have already approved the pilot of some business models using stablecoin, and the results are really promising.
I'm curious about how you balance the private sector push, and how you also want to engage and collaborate with the private sector on the enterprise side, and then be clear on how the central bank is engaging. To Linda's point, this is an opportunity for regulators to also think from the code level. How does money actually behave digitally? I'm curious about how you think about that.
As mentioned earlier, we have been adopting a flexible approach. We've been collaborating with the private sector, because at the end of the day, if we talk about new technology, right, so we cannot regulate actually what we don't understand. That's why it's important to us to constantly engage the private sector. We learn together. We are part of the journey to improving digital payments using stable coins. And we are also making sure that when it comes to regulations, there are clear, evidence-based, nuanced regulations that are really intended to minimize the risk associated. Because at the end of the day, while we see the potential of stablecoin, there are also risks associated related to money laundering, cybersecurity, etc. All of these risks. So that's how we adopt a balanced approach when it comes to innovation.
I think you raised a really critical issue, Director. Stablecoin policy is still in its infancy, including in the United States. Linda, I'll note that we have a lot of proposed policy that's in front of Senate right now, including CCI testifying in front of the Senate hearing just a few days ago to talk about even something as basic as how do you regard cryptocurrency? How do you regard stablecoin? In your view, how much of that needs to happen quicker, sooner than later, especially after the Terra Luna collapse that we all experienced globally earlier this year, that triggered obviously contagion that hit directly to a Singapore-based firm called Three Arrows Capital. How important is speed when it comes to regulations?
Yeah, I think it's important that the regulators always adopt a dynamic policy framework. So we issued our first regulation on virtual currency, which is now called virtual asset, back in 2017, and that was revised by 2021, and we are now in the process of amending that particular regulation. So essentially, even stable coins are already captured in the existing rules on virtual assets. Most regulators would call them virtual asset. And there is also now a pending legislation in our Congress regarding virtual assets. So I think it's important that regulators should adopt a dynamic policy framework.
Is that going to be good influence to U.S. regulators, Linda?
So I think in another life, I probably would have been an urban planner. And when I love living in cities, and I always get really annoyed when people, run red lights because there's a reason why we have red lights. And there's also a reason why we all agree the rule of the roads are to drive on the right. I just came back from London where they drive on the left, and I was constantly afraid I was going to be struck crossing the road. But at least that is the rule. The law in the UK is you drive on the left. We need rules so we can actually design products and services that comply and service the consumers. And until there are clear rules of the road, then people are just going to drive in all sorts of different directions and collide, perhaps drive into a building, and certainly we wouldn't even know if red light means stop or red light means go. So speaking on behalf of my members as DCI, we actually welcome clarity in regulations, and we very much want policies to be made engaging the industry, a real notice and comment process where there is a back and forth dialogue between policymakers and industry.
Martin, I'm curious, and absolutely to follow on that point, and Martin, getting you in here, what is the opportunity for regulators in Asia at the moment to provide that policy clarity when it comes to stablecoins, especially if you're going to open up your market to this emerging innovation space?
Yeah. So first of all, I think speed is very critical.
Mm-hmm.
However, speed has different meanings in a sense that it's important that regulators get started, that they engage, that they work on frameworks. It's unreasonable for the market to expect that the regulator will get everything right the first time and come out with the big regulation that solves everything. So I quite like the approach that Singapore has taken with multiple different pilot projects that allow the industry to work things out, run through examples. We've seen it in other jurisdictions as well. The EU is launching a pilot regime, a sandbox for distributed ledger, which is going live in March next year. And you can see that they're acting on it, but at the same time, this is a sandbox that is projected to last for 3 years. So the final regulation will not be out for that amount of time, at least, and maybe even longer. And that's probably the right thing to do when it comes to regulation. You have to feel yourself into it and find out what to do. The opportunity comes then with the use cases. It's not with the stable coins itself. It's what is it that you can do with it. And across Asia, we still have to recognize that in many ways, settlement systems and payment systems are quite different. If I look at Singapore, the payment system looks fantastic. I can send money on my mobile phone, it arrives instantaneously on the other side, and I have no problem for it. Which not in all countries is the same case, and their the conversation should take a different urgency when it comes to something like stablecoins. We're looking a lot at traditional financial assets, at the B2B space, where financial institutions are, dealing with trading venues, with dealers, with issuers and investors, and therefore those same retail rails are not in place for institutions. The amounts are larger. It takes on a different dimension, and therefore money is still going through the old systems, and therefore it's still slower. And we actually need to see innovation in that space as well.
Yeah, it's a two-prong approach. That's certainly the case. We took a poll to take a pulse of what's happening in the real world. Forecast took a poll because we're truly witnessing a history-defining moment. Money is evolving, changing form. And what will the future hold? Well, we asked our viewers, how do they think that people will pay for coffee in the next 5 years? And let's roll that poll. And in fact, 40% said that they're going to be paying for coffee in some form or fashion, either stable coins, cryptocurrencies, some sort of digital currency. And our panelists, I mean, it seems like that might not be too far away. In the Philippines, according to a recently published report by Chainalysis, emerging markets are leading crypto adoption, with Philippines taking up second spot on the list. Director Plebason, what does that mean for the country, for the future of the country? How is it evolving its economy with the growing adoption of crypto, of stable coins, of digital assets? And what does that mean for greater regulations to protect the public?
Yeah, again, as I mentioned, since basically the Philippines has a young population, that's why a lot of people really are into crypto right now. And again, I would like to highlight the importance of regulations when particularly we have identified non-negotiables. Let's say we are engaging a particular institution, let's say for a pilot activity. The non-negotiables to us are, of course, cybersecurity, consumer protection, and money laundering. You should be able to address that. And that's why it's important that those issues are addressed early on so that we may be able to, start this journey on the right path.
All right. Well, we are. Go ahead, Martin.
Your poll had 1 in 5 people expecting that people pay their coffee with gold. Did I see this right? That that's quite a scary scenario if this is the actual gold. Linda, I may have to move to the US and find a farmhouse in the backyard and buy a gun. If that's the case, if you're going back to a barter economy, I hope that scenario is not happening.
It was a fun poll, but I think the point was that it was that there was really, in a world where payment can come in any form. We talked about stablecoin, but what about CBDCs? And this is the critical question we're going to be asking right after this short break, everyone. We've talked all about the interesting applications of blockchain technology in the stablecoin space. But now, from a sovereign point of view, what's happening across Asia, including Singapore, Philippines, Hong Kong, China, and a lot of ASEAN nations, what's going to be happening in that space, and what impact will that have? All of the implications of CBDCs when we come back. We're going to take a quick break, 1:30. And audience, go back, make sure that you ask the questions. We will get it answered. Stay with us.
Forecast News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forecast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forecast has it covered. This is Forecast News.
If you don't understand the future, you'll never see your place in it. Introducing Forecast Plus, covering all things blockchain, independent reporting, insights, and access from Asia to the world. We cut through the noise where technology, insights, and access meet, where smart conversations happen. Make friends with disruption. Forecast Plus.
Welcome back to Crypto Rising. In another forecast poll, we asked people which country will be the global leader in blockchain and digital assets. Any guess who the winner is? It's not Singapore, it's not China, it's the US. 38% of poll participants said the world's largest economy and superpower remains a leader. Though I have to say that's somewhat ironic in that the US does not have a CBDC. It is still debating what crypto is as a security or a commodity, and which of the many agencies it has should be in charge. And all of these conversations are still happening in Washington, D.C. Linda, you are in the thick of it. Let's start with you. You're in the heart of government there. It is a little ironic. But you worked with top government bodies in the US, from the SEC to the Fed. Most of your career was devoted to financial stability and policy. You're applying that now in the blockchain space. We know that the White House obviously unveiled its guidance last Friday, following Joe Biden's executive order earlier this year. That included recommendations from a number of reports published by various government agencies. The Treasury itself published 3 reports and invited the public to share their views on the potential risks associated with digital assets. Except there is no clear specification, nothing decidedly comprehensive at the moment. Can you give us a little glimpse as to what's happening in Washington, D.C.? All of this conversation leading to what?
Well, I wish I had a crystal ball. I don't, but I do have a lot of confidence in my fellow Americans and also in our economic know-how. The debates that we're having now are very important. And regarding CBDCs, we know that the Fed has asked for congressional authority to issue CBDCs, and it really will not do so until it receives that authority directly from Congress. But that doesn't stop the Fed from conducting experiments and doing research. And if you look at the work that Fed Boston is currently conducting with MIT, it's called Project Hamilton. They are looking at how can we have high throughput while using blockchain, and they have achieved that in their latest experiment. And now they're proceeding to other aspects of blockchain usage for CBDCs. Now, I have spent most of my career at regulators, the last one being the Fed, and the US has a tradition of not regulating unless there is an economic rationale to do so. So generally, US regulators will not step into a market that is nascent And I think now that crypto is finally getting a lot of attention, it means we have actually reached a threshold of importance for policymakers and regulators. And everyone agrees there should be regulation, but how should we regulate? And I don't want to get caught up in the, oh, is it a security or a commodity business? But I want to focus more on, what are the building blocks that the US needs to put in place to have the most competitive digital economy. And that means having a digital money, and that can be either CBDCs or privately issued stablecoins. It also means privacy enshrined in digital identity solutions. And then the infrastructure that is open and interoperable. So I can't stress that enough. Right now, blockchains are they are cross-border. They are global. However, you cannot go from blockchain to another blockchain, and that is the holy grail of engineers right now, to figure out how to make them interoperable. But I think they will. And when that happens, the questions become, how are we going to have cross-border payments between the different countries and reduce the frictions, improve trade? And these are all the benefits I'm really excited about.
Well, let's talk about it. Philippines, you're looking, especially in the as a member of ASEAN, one of the nations that are looking to engage in cross-border CBDCs with mBridge potentially. That includes Hong Kong, Thailand, UAE, and others. Over in Singapore, it's Project Dunbar, where we're seeing engagement on cross-border transactions with CBDCs. More than half of the world's central banks are now exploring or developing digital currencies. Director Plabusan, question from the audience, asking very specifically, what is the current state of CBDC in Philippines? And what is BSP's timeline for a real pilot, the kind of which I assume that we are seeing in China?
Yeah. So we are actually on track to pursue a pilot project on wholesale CBDC. Of course, this is part of our efforts to strengthen the stability of payment systems in the country. So barring any major roadblocks, I think the pilot is expected to take place or to happen in, by the fourth quarter of this year, and we call it CBDC PH, and primarily this will focus on large value transactions available 24/7 across a limited number of financial institutions. Martin mentioned about the importance of learning by doing, so that we hope that with this pilot we can actually learn hands-on on the opportunities and risks associated with CBDC, and hopefully this can also inform our short-term to medium roadmap when it comes to adoption of CBDC, both short-term and long-term, and of course also in the horizon is the potential to also issue general purpose or retail CBDC.
Okay, that's really interesting, because that is banked and not participating in the traditional finance space. Do you think the retail CBDC can actually catapult many of those that are unbanked at the moment to engage, especially for a country that is so remittance dependent for its economy?
Yeah, and as mentioned, Angie, we are focusing our attention now on wholesale CBDC, because based on our study we conducted, I think it was end of last year, 2021. So basically our study suggests that the wholesale CBDC will yield greatest value, adding benefits to the payment system in our country. Because let's say if the objective for, let's say, going into retail CBDC is really financial inclusion. There are a lot of efforts right now, that are not related to CBC, that are being undertaken by the BSP and the private sector. And as mentioned earlier, we are on track with our twin objective. 70% of Filipinos should have access to a financial account, and 50% of transactions should be in retail transactions should be in digital form by end of 2023. Again, it's not just CBDC that we are looking at for us to be able to achieve those objectives.
Interesting. I mean, Martin, over in Singapore, Singapore has launched, as I said, Project Dunbar, this multi-CBDC initiative, which includes Malaysia as well as South Africa and Australia. How do you see participation in this space from a greater regional cooperation positioning? And I'm curious if we're going to see some more cross-border transactions and relationships established with even China. Your thoughts there?
So this is a little bit of a race between the central banks, the private sector, and Singapore. We have Partior, which is an initiative that is looking to solve transfers between currencies. I do have a confession to make from our perspective at MarketNode and SGX, where we look at traditional financial assets. We actually don't care whether the money that we use is a central bank digital currency or tokenized commercial bank money or a form of stable coin that is under a regulated umbrella, such that financial institutions are sufficiently comfortable with it to use it. What we really need is money that goes swoosh and doesn't arrive in a horse cart. And therefore, which type of technology this is, from my perspective, isn't so important. What private stablecoins have been very useful for is pushing the envelope and showing that it's possible. And now it's up to sort of regulators in the private sector to take this forward, and really hoping that that the advent of this is coming soon.
Linda, I want to, kind of mark that comment that you made earlier, where money is now money in the future, and potentially right now it is a form of communication. And how should regulators and policymakers actually be thinking about how to communicate perhaps its sovereign and foreign policy and global monetary positioning in its digital currency? And I will also note that the US Treasury, as it was asked to explore potentially CBDC, said that it's seeking guidance from executive branch in Congress if it is related to national interest. These are huge responsibilities that regulators and policymakers have right now with defining what a CBDC is and how it should behave.
Well, I was just in London last week, and someone in the UK expressed that their, RTGS, digital payment rails, is their national treasure. And I don't even think that we in the US think even reflect that much as this person and many others did at the Bank of England. But we should, because as you mentioned earlier with the Kissinger quote, money and having control of money is soft power. And we need to think carefully about, what should be the new digital rail for the US, and not only who domestically can have access to the digital dollar, but also overseas. There are many things that one would need to do to welcome the digital dollar into the economy. That includes legal changes, regulatory changes, accounting rules would also need to be changed. But in the end, money is still a social construct. and we have to enshrine it in the law. So if we all agree that, this is actually a movement of value, a medium of exchange, then we need to make sure that we also put in the correct legal protections and liabilities. And that should be done in a harmonized and coordinated way across the globe, and not just in bespoke fashions in US and Singapore, Philippines, etc.
Yeah. Director Plebason, how do you think about it as you architect and BSP thinks about architecting the CBDC out of Philippines, turning a digital pesos for domestic economic policy and potentially international engagement as well? What kind of, how would a CBDC behave? What are the ideas that you want to entrench into a digital CBDC that we would see coming out of Philippines?
Yeah. So again, as initially we will be focusing on wholesale CBDC. So essentially, we expect that this pilot will further provide us, let's say, insights on policy and, let's say, regulatory considerations. What would be the technical infrastructure required, governance and organizational arrangement, including legal matters, settlement models, and risk management. So all of these factors will be considered as we design wholesale CBDC, as we pilot wholesale CBDC by the end of this year.
Well, I want to go ahead.
Could I just quickly build upon what Mel said? The digital, the national interest is not going to be just CBDC itself. It's going to actually be the entire digital payment infrastructure. And so it could be also privately issued stable coins. It could be also platforms that can be public and private. And all of that put together can be, the national treasure for a country.
I want to take the pulse of the audience again, and we're getting some really great questions, but this poll really sets it up. And this poll centered around privacy and security. We asked our viewers some of the reasons potentially that they would not use CBDCs. And more than 51% said because of trust issues. So obviously we have the dragon in the room, to be culturally appropriate, is what's happening in China and ECNY. And the PBOC has very clearly stated that it is not going to be anonymous. And obviously this is in true fashion of its own domestic and international policy, domestic policy at least. But how do you engage as governments to build trust with a CBDC product? And I'm curious how regulators and even the private sector and all of you panelists, this question from the audience: how should regulators think about the policy implications of a CBDC rollout? Andrew Bragg is a senator in Australia for the opposition party. He led a lot of the consultation on digital assets in Australia. Andrew Bragg has announced that he wants to regulate use of the ECNY by Chinese banks in Australia. Now that's really interesting policy specific guidance of one country to another's digital ambitions. How do you all think about it? Reaction?
From my perspective, what we see is cross currency as well as assets. It's the integrity of the registration of the asset that you have that really matters, that plays to the trust point. And allowing the holder of the asset to prove that they are the holder of the asset. So to a large extent, that's what we often see the trust point to be. the privacy debate has huge cultural differences. I used to stay in Korea. I had a very interesting anecdote that I thought is interesting on framing, because in the early 2000s, Korea had a big problem with the black market economy, and enabled private people to deduct their credit card bill from their taxable income. So if you have $100,000 in taxable income, $10,000 on your credit card, then you only taxed $90,000. What it did is encouraged everybody to start using their credit cards because it reduces their taxable income, and in turn made the whole trail of commerce electronic and helped to stamp out a black market economy. And that's an awesome example of how use of electronic means can actually help achieve real economic outcomes that are positive for the whole economy.
Linda, I'm curious how you think about China's ECNY. I'll note that ex-chairman of CFTC, Chris Giancarlo, head of the Digital Dollar Foundation, in early conversations with him as they were rolling that out from a private enterprise side, that China's ECNY obviously will reflect the philosophy, the sovereign perspective of how it wants to engage with the world. And a US CBDC should behave very differently philosophically for the world as well. I'm curious how ECNY and the incredible acceleration that we've seen from China as it contrasts with everyone else.
Well, as someone who formerly worked at the Fed, I can say pretty confidently that the Fed has no interest in collecting personal data from Americans. That's a huge, not only responsibility, but burden that the Fed would not want. And the CBDC that I would expect to be designed by the Fed would be probably in the beginning at least, a wholesale CBDC that is very straightforward, no bells and whistles, and then it will be the privately issued stablecoin sitting on top that will be the ones accessing our personal data. So, how do I feel about, say, the US regulating, say, the use of ECNY by Americans? I think it would be important to actually clarify what rights do Americans have to control their data and thus be able to control their digital assets. And this is an area that we actually haven't spent that much time on. The Europeans already have done quite a bit in GDPR. But here in the US, we do have some principles under the Constitution. And then we have one data right under Section 1033 of the Dodd-Frank Act, which allows us to actually go to our financial institutions and say, hey, I want to see the data you have on me. But we actually don't have the right to take our data with us. And if you apply this down, all the way down to what would be the consequence of that, it would also mean that you don't have the right to control my digital assets. And so I think some of the best ways for US policymakers to give protections to Americans would be actually to give us the ability to control our data. And that from there, on a principle basis, you can actually decide how should that be regulated, not just flat out identify one country and say we need to regulate just that particular digital currency.
Quick
Director
comment,
Pleveson,
Angie. Sorry.
Please go ahead.
On you mentioned about trust, and it was also mentioned by Marty. While early on I mentioned about the different considerations. I think it is also important that the risk management model is considered early on in the design of CBDC. So when we speak of risk management, identity, privacy, cybersecurity, etc.
And I want to follow up on that. At what point and how does the Central Bank of Philippines think about it if Philippines is engaging in, obviously foreign trade with China, asked to use ECNY, and or firms in Philippines asked to use ECNY, full knowing that there are design characteristics that might be contradictory to how you feel about it. How would you engage?
Yeah, I think since different jurisdictions would have different timelines with respect to CBDC, I think it's very difficult to figure out right now how cross-border transaction utilizing CBDC would behave in the future. Again, given there will be issues on standards, etc. So it's very difficult. I think most of the jurisdictions right now are really focusing on the use of CBDC first within their jurisdiction.
Final question from the audience as we run up to the top of the hour. BSP aims to, this question from the audience, BSP aims to increase digital payment use in the Philippines. So how do you plan to do this if not through retail CBDC at the moment? Will BSP tap the private sector, and how?
Yeah, we are engaging the private sector right now, even other government agencies, because retail payment would also include government payment, right? So there are a lot of policy initiatives and reforms. We are looking at open finance to further drive digital payment. We recently allowed 6 digital banks. We granted licenses to 6 digital banks. So there are a lot of initiatives right now to digitize payment in the Philippines, not necessarily related to CBDC.
All right, we are wrapping things up, and I'll ask each of our panelists to contribute here. One takeaway for regulators, for policymakers around the globe, should there be consistency, collaboration, an even level playing field on the regulatory front, and what would that look like? One takeaway. Director Plebeson, I start with you.
Yeah, I think it's important that the regulators are open, are flexible, right, with respect to innovation. And even right now, we are exploring the possibility of participating in ASEAN 5, right? So with respect to its project called, it's on cross-border payment, multilateral payments connectivity project. So I think that's important. It's important for us to be open and flexible, and at the same time, be also mindful of the mandate on maintaining financial and payment stability.
Linda, one takeaway.
This is a very hard question. I would appreciate international coordination among regulators on this issue. Crypto is global, and that means the framework for regulating crypto should be coordinated and harmonized.
Martin,
My
one
key
takeaway for everyone.
My key takeaway is speed, because as you mentioned, we do need a level playing field. We have the private sector that already has a working solution and continues to improve on it. We see more use cases coming in of the stablecoins. It's not just buying crypto, it's also making transfers, it's also purchasing assets. And therefore, the faster regulators get their head around it, the better. And when I say speed, it's with the knowledge that actually implementing regulation will take time. So it's speed about getting started and getting going and engaging the ecosystem and starting to provide some clarity on thought processes that make that conversation with the industry much clearer.
When it comes to speed, it's a commitment of time as well, and how quickly our audience, our panelists, our industry, regulators around the world, how much they engage, do their homework, and accelerate in the understanding. And that can take time, but with these engagements and these virtual events, and obviously the conversations that we are having right here and across Forecast, it is critical to understanding the future. Again, whoever controls the money controls the world, except in a decentralized world. Money is taking form in different ways. And in our 21st century, I believe that technology is equalizing access and control, and every one of us has a role to play. And the challenge is, how will this shape the world in a way where we see more inclusion and thus more opportunity to engage in a global economy? No doubt Asia is among those leading the way. And I think this panel, and I think everyone in our audience from more than 90 countries around the world, to engage in a more collaborative approach, like conversations like this, that compete for the hearts and minds of innovators. And that's a wrap. I want to thank you to all of our guests for their candid perspectives and insights. And I want to thank you to our partner, CCI, for unlocking this event series for free to our global audience, and to you, our global audience from around the world. Thank you for joining us. And from some of the most important regulatory perches across banking, legal, policy sectors, we thank you for joining us. It's this kind of conversation you won't get anywhere else. And that is a wrap for today. Just a little bit of housekeeping. There is much more on Forecast Plus, our membership portal, where some of the brightest minds in the space depend on for the latest developments across Asia and the globe. And you are also supporting credible and quality coverage just like this. Stay tuned for our next Crypto Rising event on October 5th, 9 a.m. Hong Kong time, on the role of law in international debate post-tornado cash. So much to unpack there, and it is a controversial topic to be sure. What's next? For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time, thanks everyone.